Good day, ladies and gentlemen, and welcome to the Q2 FY23 earnings conference call of Prestige Estate, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Samar Sarda from Axis Capital. Thank you, and over to you, sir.
Thanks, Michelle. Welcome again, everybody, and thanks for taking out the time. As always, from the management, we have Mr. Irfan Razack, Venkat, Amit, and the senior team. Sir, firstly, I congratulate you for a very good performance for the first half of this fiscal. Mr. Razack, if you could take over for your initial comments before we jump into Q&A.
Thank you, Samar. Welcome everybody to this call. It's again a pleasure to meet all of you and to take your questions. It's been quite a hectic quarter for us. I think we've clocked the highest sales the company has done in a quarter, that is 3,500 crores plus in a quarter. And the collections also have been the highest in a quarter. So all this has actually led us to a lot of positivity. And we've concluded the half year with about 6,500 plus crores of top line revenue and almost 5,000 crores of collections. So that is where we are now, and that is helping us to leapfrog to the next level. It's giving the team have worked hard and seen that they continue in the same vein. Of course, the external atmosphere also is changing rapidly in terms of interest rate hikes and all that. In spite of it, we believe that this thing will sustain. And going forward, good locations and good product priced properly will definitely yield results as we go along. Venkat, anything you want to add?
Yes. Thank you, sir. And to add a few other things to what we have done during this quarter, in the presentations we have mentioned that it's been a good first half of the year. 8.18 million square foot of area sold overall. We had a realization close to 8,000 rupees a square foot, and we sold at an average 30 plus units a day during the first 6 months of this fiscal. We've launched close to 17 million square feet across various segments and geographies. And we just inaugurated one of our largest residential development, Prestige Jindal City, that's around 6 plus million square feet. That comes to this quarter. With that completion, it's also over 10 million square feet so far this year. And the sales for this quarter has come from all the geographies, including new geography that we have added for the residential segment, Mumbai, which contributed 400 plus crores of sales. Of course, Bangalore has been the leader with 2,600 crores of new sales. In terms of financial highlights, we didn't have any major projects getting completed this year. All the revenue recognitions have been incremental revenue recognitions from various ongoing projects and sale of complete inventory. We had overall for this quarter 1,474 crores of revenue with 415 crores of EBITDA and 149.2 crores of PAT. EBITDA is at 28% and PAT is at 10.12%. Half of the first half of the year, overall, we had 3,486 crores of revenue with 27.27% of EBITDA and 11.48% of PAT. It's been a very good quarter and half year. We've got a lot of projects that are in the final leg of approvals to be launched across the geographies. We have 2 projects in Hyderabad, mainly Prestige City, and other projects at Kokapet in Hyderabad. Maybe end of Q3 or beginning in the middle of Q4 is when that will get launched. Chennai, we have Prestige Pallava Gardens, large residential project that is getting ready for launch. And we have two projects in Bombay. One is Prestige Ocean Towers in Marine Line and Prestige Nautilus at Orly. And we have waiting for approval for Sector 150 at Noida to be launched. So we have robust launch pipeline and with existing inventory, which is very less compared to the run rate that we have in terms of sales, which is 6,500 crores. That's the 6 months of inventory that we have. The launches are going to be the key, and we would like to highlight that the entire team is working hard to get the approval so that we can launch the project. And other point that we want to highlight is, in spite of the sales, the collections also have been equally good, and debt equity remains almost where it was last quarter. 0.41 is where we are at, and we look forward to other exciting quarter and rest of the year. Thank you. With this, would like to open the forum for question and answers. Maybe one last bit that I would probably want to share is the cash flows, the amount that we have spent for the construction. During this quarter, close to 1,600 crores of money we have spent on construction, 1,000 crores for the residential, and 600 crores between office, retail, and hospitality, which is CAPEX. And we also had money spent towards land deposits and the buying back of stake, close to 1,000 crores during this quarter. Entire half year as a whole, if you look at from a development portfolio, we had close to 900 to 1,000 crores of surplus cash flows coming in. We've seen our collections have been over 4,700 crores, and the spend towards residential has been 2,166 crores, projects that were meant for sale, and we had an overall business development activity of 1,847 crores, totaling to 3,900 crores as against the collections of 4,700 crores. And the CAPEX of office, retail, and hospitality all put together, we spent around 850 crores of 850 to 900 crores of construction in the first half of the year. Thank you, and with this, I would like to open the forum for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask a question. We have the first question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Hi, team. Congratulations on a great quarter and all-round performance, both on cash flows and pre-sales. But I am a bit worried with the acceleration in the pre-sales. If I see your presentation, you have only about 33,000 crores of new stock or upcoming projects, and with the current run rate of 12,000 crores plus of annual sales. So, just wanted to pick your brains. How are you looking at the business development pipeline? Because we hardly have any inventory to sell.
As I mentioned in the opening remarks, we have at least a clear visibility for over 10 million square foot of projects that can even go up to 15 million square foot in the next 2 quarters, spread across Bombay, Bangalore, Hyderabad, Chennai, and NCR. So that should not be a problem. We're gearing up for the launches of these projects. And of course, if you look at our overall upcoming project pipeline, in terms of residential, it is even more bigger, and continuous business development activity also is happening. We are conscious of the fact that we need to launch more projects to sustain this run rate. We have another 57 million square feet overall residential projects which are in the upcoming portfolio. So of that, 10 to 15 million square foot will get launched, and the remaining projects are under planning stage.
So, my question was more from the business development side. I know for next 3 years we have enough to sell, but so what's the target of gross development value addition in this year? So basically, I'm more pointing towards the business development for a year as a whole. Like some of the developers who are doing similar run rate are looking to add 15 to 16,000 crores of gross development value or the new GDV. So what's the target there? And any updates on the AIF? Because I think last quarter you did mention about the AIF. If you can update us also on that.
We have, in terms of business, that is something which we have not put in the presentation because there are various deals and different stages of discussion. Some of them are close to signing, some of them may be non-binding term sheets, some of them are diligence stages. So we have enough business development activity that is happening for all the geographies that we are present in, including the Gurgaon where we are not present. We are looking at making an entry. And the overall, the value, once those deals get materialized, what they can give is going to be close to 2 years of the current run rate. So that's almost going to be around 20,000 to 25,000 crores of, the turnover of project size. Second is, yes, we are working with now in the platform on the AIF bit. There are particular identified assets we are putting into separate SPV, and HDFC, we have undeployed capital from the old platform that we had started with them for residential. We're going to draw and utilize that money. There's another up to 2,500 crores of platform that we have signed. So far, we have deployed only close to 500 crores, 2,000 crores of money. We are exhausting that money to build that platform and then start putting AIF money to use.
Okay. The second question is the commercial side. So we have moved the Mahalakshmi project to an ongoing. So what's the update on the BKC project? Do you think this quarter they will move into ongoing projects? Have all the approvals been secured? And also, if you can tell us, you've given that rental pathway till 2028. So if you can highlight what's the lease status for some of the key large projects which are ongoing, both in Bangalore and Mumbai.
So, as you rightly noticed, the Mahalakshmi project, which is Liberty Towers, has moved to ongoing from upcoming. The BKC projects will move to ongoing projects during this quarter. We have primarily 5 projects that are nearing completion. That is Prestige Cyberview at Kochi, Prestige Alpha Tech at Kharade, Pune. We have Tech Park 4 and Tech Pacifica. Both put together is almost 1.8 million square foot in Bangalore. And we have Prestige Tech that's going to get completed in Hyderabad. These are the projects that are going to be ready. All put together is going to be around 5 million square foot of projects. We have at different places in advanced stages of leasing. Some places we have already signed leases which will come into this quarter. And therefore, the rentals will start growing from FY23 and FY24, and these projects will start contributing to the annuity portfolio.
Okay. And just the last question on the forum, Falcon City Mall. So it's completed, we are showing it under completion. So what is the total lease status here, Venkat?
That mall has been pretty much leased out. It's only the documentation that is happening with respect to 30% of the tenants, remaining 70% even documentation is being completed, and they are doing their fit-outs. We are opening the mall to the public on 1st of December. Of course, it will take 4 to 6 months for all the tenants to open and the mall to start functioning in a full-fledged way. And it's going to be one of the best malls with the metro connectivity and great amount of catchment in that area, and we have, in fact, clocked in some good rentals.
Okay. And since on the AIF platform, how much have you raised totally? Can you disclose that number?
The total commitment from the fund is under 2,500 crores. And we'll get put the unused money of HDFC platform to use first, and then start putting the money of AIF into utilization.
Okay. Thank you, Venkat, and finally, thanks for answering my question.
Thank you very much, sir. Thanks for all your understanding of our operations and the questions.
Thank you. We have the next question from the line of Puneet from HSBC Bank. Please go ahead.
Yeah, thank you so much, and congratulations on great numbers. My first is if you can share on the sales, how much of it was plotted sales, how much of it was commercial sales, some color on the sales breakup.
Both plotted and commercial put together during this quarter would be around 15 to 20%, but predominantly coming from apartment sales. This is Orchid in Hyderabad is what we had launched, which was sold. And Park Drive in Bangalore, a small portion of Park Drive. And not much of sales from the commercial portfolio. So all put together would be between 15 and 20%.
Okay. And also, can you share what would be Prestige share of sales in the 3,500 crore number? Also for collections and volume.
Prestige share of sales, we don't have it handy here, but I can share it with you. But because now, more than the area share we are doing, most of the projects is a revenue share. Okay. So the sales are asked and we just have to give their portion of the revenue. So all sales will be accounted with us. So but nonetheless, I'll give the data.
Okay, fine. And sorry, I missed how much is the money undeployed from HDFC and what is the arrangement now?
The original platform that we have signed for 2,500 crores, we deployed 500 and the balance 2,000 has to be deployed.
Okay.
We're looking at deploying into various projects, in the stage of delivery and the time stage.
If I remember, it was for the affordable part, right? And is that still the intent?
Affordable and mid-income.
Yeah. So that's still the intent. You can't use that money in Mumbai, or can you use that money in Mumbai?
Oh, we are not using that money in Mumbai. We are using between Hyderabad, Chennai and Bangalore.
Okay. Hyderabad, Chennai and Bangalore. Okay. That's great. And secondly, on your commercial projects, you talked about 5 million square feet getting completed. Would you like to keep it on your portfolio to earn rentals, or is there a plan to flip it off and then redeploying that cash for a higher return again?
Not as of now, sir. I think next 3 to 4 years we'll continue to build this portfolio again to sizable scale. Okay. Like we did in the last 5-6 years before we did the Blackstone transaction. And then once we reach the scale, we'll take a decision.
All right. Okay, that's great from my side. Thank you and all the best.
Thank you. Thanks, Puneet.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and 1 now. We have the next question from the line of Ritvik Seth from One Up Financial. Please go ahead.
Yeah. Hi. Good afternoon, sir, and thank you for the opportunity. So my first question is regarding to the CWIP in the commercial, retail, and hospitality projects. Is it possible to share the CWIP figure as of September 2022?
One minute, Mr. Amit, CFO, would be able to give the number. We're talking about CWIP of all GPEX projects?
Yeah, correct. Yes.
The capital total, all capital project is close to 2,929 crores, what was spent till date.
Okay. And what would be the balance amount to be spent over the next, say, 4 or 5 years to complete all the projects that we have mentioned?
Only our share will be around 7,000 crores.
Okay. 7,000 crores is left. So this safe to assume that we will be spending it over the next 4 to 5 years, right?
Yes.
Sure. Okay. And sir, would it be possible to share the gross and net debt figure in the JV and associates which doesn't get consolidated in the balance sheet?
The gross debt, Prestige share would be close to 1,000 to 1,200 crores, which does not get consolidated.
So the existing debt plus 1,200 crores is what we can add.
Okay, 1,200 crores. That's the gross debt.
Yes.
And this would be mainly related to the BKC project, right?
It mainly pertains to the Dial project, as in Delhi.
To the Dial project.
Obviously.
Okay. Sure, sir. And sir, just one broad question. We're currently at 12,000 crores of run rate if I look at the first half. And we have about 35,000 crores of ongoing and upcoming projects in the residential side. So, three times of what we are. So what would be a comfortable level for us? Because to grow on this base, we'll have to add on BD projects, as you have been mentioning in the last 2 quarters. So what would be a comfortable level for us on the total ongoing and upcoming projects, inventory value-wise?
So now, if we have to maintain this run rate of, say, 12,000 crores, our offering should be at least in the range of 20,000 crores. So that is 60% of that gets sold also is around 12,000 crores of run rate. But as many mentioned earlier in this conversation, the total stock that we have is 6,500 crores right now, but therefore the launches become key. And I have also given the details of which our projects are ready for the launch in the second half of this year, and the various business development activities that are going on. So we will see, based on the demand that we have and offtake that we have, so where to add which locations in the existing geographies that we are operating. Only new thing would be, it's taking a long time to launch a project in Noida because of the approval, last stage of approval, and we may add a project in Gurgaon this quarter.
So you would like to have ongoing projects north of 20,000 crores. That's
the idea. So that offering will be comprehensive across the geography, and there will be options at least for the customers to choose from.
Sure. And just if I may squeeze one last question, what is the HDFC platform? If you can just refresh, how does that work for us?
We had in the past, when we had disclosed to you, had signed a 2,500 crore platform with them to develop affordable and mid-income portfolio, and we did draw money from them and deploy it in 2 projects. And the balance money that is to be deployed. Now we are looking at various projects in Bangalore, Hyderabad, and Chennai to draw that and deploy into various projects.
Okay. Yeah, so I was talking about, the economic interest for Prestige. What would be it like in a typical project?
So what we have earlier understanding, there's no change. The platform deal that we had signed, it remains the same. They contribute significant amount of money. We contribute the balance. Till a particular threshold, the returns will get shared in the ratio of contribution. After that, equally, and beyond that, it's going to be entirely to us, or mostly to us.
Okay. Sure, sir, I'll get back in the queue. Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and 1 on their touchtone phone now. We have the next question from the line of Pritesh Sheth from Motilal Oswal Financial Services. Please go ahead.
Yeah, sir. Thanks for taking my question. So firstly, in terms of Bangalore contribution for this quarter, around 2,600 crore, and I think largely it came from Prestige City, and with that inventory reducing, and now almost we are sold out. So how do you plan to maintain this run rate in Bangalore? And considering, looking at your pipeline, I think probably only project which I can right now look at in terms of which is large size is the Palm Groves, right? So what's the launch timeline there, and how are we planning to sustain this run rate in Bangalore?
No, it's not only Palm Grove. It is also, we've got Prestige Lavender Fields, we've got Prestige Serenity Shores, Elm Park, as well as phase 2 of Primrose Hills and Prestige Sanctuary. All these will get done within this quarter or early next quarter. So there's a huge pipeline. Palm Grove, we are looking at it only probably, Park Grove, we are looking at it, if all this inventory comes in, to sort of time it even in the next fiscal, because this will give us enough numbers. And if all goes well, and we still need inventory, Park Grove approvals come, we could do Park Grove also in the last quarter of this fiscal. So there is enough inventory, and apart from this, we've got a huge pipeline of land bank where all the planning processes are going on and approval process will go on. So it's an ongoing process. There's enough inventory in Bangalore. In Hyderabad, we've got a very large tract of land which is called Prestige City, Hyderabad. Even there, that will be almost 8,000 crores worth of revenue that will come from there. That project is under approval. And also in Hyderabad, we've got one more project called Prestige Claremont, which is owned by us fully. And that one will give us about 1,000 crores of revenue.
Okay, so very confident, I mean, we can sustain this run rate on a quarterly basis in Bangalore as a market.
Yes, I don't see any, in terms of visibility of raw material or stock for the next 2 financial years. Of course, and then business is ongoing. If things keep going well, there's more and more things we can do. We don't want to overtrade. We have enough inventory now coming up in Mumbai because first phase of Prestige City Mulund has done well, and that we can once substantial inventory is closed, we can even launch the second phase. That is the Forest Hills. So there's a strategy. Things are going well, and we'll adopt that strategy and move on. No issues.
Great to hear that, sir. And if I heard the initial comments correctly, in terms of launch, we are also looking to launch the Shiv Shahi project. I don't recall the name which you called out.
That's all Prestige Nautilus. Even that also, the planning process is over now. It all depends on how soon we get approvals and the rest of the, the title stuff that happens. Once that's all in place, even Nautilus will be on. We are trying hard to see that it comes at least in the last quarter of this financial year. And also there is in Marine Line that is called the Ocean Tower. That's also, but these are high value properties. So high value will not give us that huge, sort of traction that we get from the mid income. But even though revenues will come from there.
Sure. And in terms of, the pipeline, business development pipeline, you indicated around 25,000 crores. How is the mix in terms of outright? Because of late you have been inclined to getting into outright land transactions. So mix in terms of outright versus JVGD, and what sort of, spending that you are looking at in terms of maybe next 1.5 year in terms of business development?
Yeah, I mean, it's not that I definitely don't want to do JDA or I want to do only outright. It depends on case-to-case basis, depending on the landowner, depending on the type of deal we get and what sense it makes to the company on the bottom line. We take decisions on whether it's JDA or outright. Sometimes it's also a mix, partly it's outright, partly it's JDA. So this is part of a business process. It goes on. Really can't define to say, okay, it will be so much percent outright or X percent JDA. It's always on a case-to-case. We have to decide. Main thing is it should make sense for us financially. Then the bottom line should be protected.
Sure. And just in terms of spending, if you want to highlight how much you would need in terms of investments over the next 1.5 years for business development?
See, the good part is I'll tell you how much we need to invest. But before I say that, now there's a lot of investment that we've already done on some land, Bangalore, Hyderabad, even in Mumbai. Now these are all getting sold. So I look at getting positive cash flows from these. And Venkat will just add up to the exact number that probably would be required on what is committed in the various geographies.
Yeah. So the balance that we have to pay towards the upcoming project would be around 500 to 550 crores. And the new business development activity that we are doing, of course, that's close to, we need to execute, we need to sign then some phase of discussion to give the adequate amount of raw material for us to launch and sell. We may have to spend between 2,500 to 3,000 crores a year.
Okay. Thank you. That's it from my side, and all the best. Yeah.
Thank you. Participants may press star and 1 to ask a question. We have a follow-up question from the line of Ritwik Seth from One Up Financial. Please go ahead.
Yeah. Hi. Thanks for the follow-up. So in the opening remarks, you mentioned about the cash flow. Can you repeat it, please? I think I missed part of it.
Overall, if you look at cash collections for this half of the year, it's around 4,700 crores.
Right.
So, let me get the breakup for you and then easier for me to explain. 4,750 crores. Okay. Now, what we have spent towards the construction of a residential portfolio and the commercial portfolio meant for sale in the first half of the year is around 2,100 crores.
Okay.
Okay. And in addition to that, what we have spent towards the business development, only towards the residential, if you look at, is 1,400 crores.
Okay.
That makes it around 3,500 crores.
Sure.
As against 4,700 crores of money that we have collected. There is also business development that we have done with respect to commercial, retail, and hospitality. I am only comparing the development portfolio.
Right. So, what would be the capex? You mentioned 900 crores we have spent in office, retail, and hospitality in the half, right?
That's right.
That would be over and top of this 1,400 crores and 2,100 crores.
Which is correct.
Right. Okay. So basically, we would be we have about 500 crores of deficit if I just add up all the 500 or 600 crores of deficit, which includes the capex spent as well.
Not really. If you say 3,500 minus 4,700 is 1,200, and what has been spent on this is 900 crores.
Yeah. Sorry. So we will be cash positive. Sorry.
Yeah. But see, the way to look at office, retail, and hospitality is they are not developmental businesses. You should see the portfolio.
Yeah.
And wherein, 2/3 of money we do avail in the bank and 1/3 is the equity contribution, broadly I'm saying. So you're not counting the inflows of this project. Then you add up commercial, retail, hospitality.
Yeah. What I'm trying to understand is that, despite no top line or no cash flow from the from the commercial, retail, and hospitality, we have managed to have cash surplus and spend 900 crores on developing the assets as well.
So saying despite, then it's correct.
Yeah. Sure. Okay. And would it be possible for Q2 as well, please?
I gave for half of the year. This is first half of the year.
Okay, sure. No problem. Thank you and all the best, sir.
Thank you.
Yeah. Yes, sir.
We have the next question from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good afternoon, everyone. So my first question is on Mulund. So Mulund micro market, as you know, has been seeing significant traction and have taken so many top developers. It's really commendable as a new player. You have received very strong response. So I just wanted to know in terms of absolute sales value and as a percentage of total inventory launch, how much you have sold in Mulund till date?
So we haven't launched of what we launched. Yeah. So we have 60%. Yeah. So we haven't launched the full inventory yet. So the phases that we have launched so far. 60% of what we have launched is what we have sold so far.
So 60% of phase one you have launched sold, and that will translate into what kind of around just a ballpark what kind of sales value?
So we sold little over around 1,100 crores from May 17th to 30th September in Prestige City, Mulund.
That's a great number. Thank you. And second question is on Liberty Towers. You have put it in the sales. Just wanted to know, are you selling the entire thing as a sale, starter sales, or it would be something like sales plus lease? And what could be the reason for the same? I mean, why you opted for that kind of strategy?
We are going to we brought this project in from upcoming project to ongoing project.
Okay. That is, we've actually just put that as a launch project, but we are not selling what it was.
Okay. So it's but anyway, thanks for the clarification. I got it. So it will be, as of now, it is under lease model, or it is not yet decided?
Lease model, not sale model.
Okay. So you have just put it on ongoing project. Thank you. And one final question is on the deal pipeline. How's the deal pipeline you are seeing in Muhammad? In a short period of time, you have done quite a big lucrative deal. But going forward, because MMR has been seeing, the reason I'm asking is because MMR has been seeing significant reduction in sales value after so many years, and it seems like many of those developers who intended earlier to JVA are now coming back and saying we'll do our project. So in terms of deal pipeline, how is the velocity and how is the deal flow? Are you seeing enough number of deals coming to you? Just give us some insight on that, what you are saying.
If you think what we have done in terms of deals so far is good, what is in pipeline is better.
Okay, that's very reassuring. And if one final question, just if I may squeeze, I see you have excluded Vijayamata project. So is it
an upcoming project, 4.5 million square foot. It's there.
Okay, it's in upcoming. You have removed from ongoing. Okay, sir. That's all. Thank you, sir. Excellent set of numbers, and all the best, sir. Thank you so much.
Thank you. You may press star and 1 to ask a question. We have the next question from the line of Abhinav Sinha from Jefferies. Please go ahead.
Hi. So first question on pre-sales. We've done about 6,500 in first half. I believe you've given a target of 12,000 for the full year, right? And would you like to increase the target now?
Yes, Abhinav, you are giving the target, we are working for you. You are the one who said in the beginning of the year that we should be looking at 12,000 crores.
So good progress. So I mean, what's next?
Abhinav, yes, we will achieve 12,000. Maybe we will exceed 12,000. But obviously not maybe we will. Inshallah, we'll cross 13 also. But at the moment, we will stick to our 12. Our internal target for our teams is much higher.
Right. And looking at the momentum that we have, can you also, in the next, say, 2 years or 3 years out, is there a reasonable sales CAGR to expand? How much will be the pricing component of that again?
2 to 3 years, looking at what?
Yeah, what is the pre-sales number that you're looking at in, say, 2 to 3 years? Or
Abhinav, the only region that we are not present in terms of, which contributes significantly to the residential sales is the NCR and Pune. And of course, in the western region, Pune. Now, so these 2 regions will definitely have a potential of 2,000 to 3,000 crores run rate per annum if we have a good offering. So now we look at every market differently and try to grow wider and deeper in these markets. There are enough micro pockets within these markets. So till we reach saturation level, we think there is enough room for growing in the next 3 to 4 years. I don't want to put number to it. But last year when we had this discussion, you mentioned saying that 10,000 crores of pre-sales for the last year was big jump from the previous year, which was 5,400. And then this base, we find it difficult to grow. But thanks to the contribution from the entire team, the new region of Mumbai contributing, and people of Mumbai have welcomed us with open hearts. So therefore, the similar reception if we get our projects in NCR region, I think over a period of 2 to 3 years we can go to much bigger number. It could be double that of what we have done.
Okay. So on the gearing side now, we had a flattish quarter, and I believe there was some small amount of inflow from asset sale also. But are we sort of flattening out there? I mean, it's 0.4, 0.5 the range to expect in the next few quarters?
0.4 debt equity?
Of debt equity, yeah.
Yeah, 0.5 is what we have given guidance for this year.
Right.
we will be within that. We will not cross that number.
But is that like a reasonable, stable number to expect over the medium term also, or you will sort of climb a bit more in the years ahead?
No, if we can continue this kind of run rate in a development portfolio, and the collections are going to be commensurate with the sales, we should be able to manage within that number.
Okay. So last question on the P&L front. So, I mean, you're sort of, stuck in the 100 crore a quarter plus minus. I mean, maybe go up to 150 sometimes, but not crossing that. And when is it a reasonable time to expect, higher profitability?
So the highest sales have happened in FY22. So majority of them are coming from newly launched than the completed. The moment these projects come for revenue recognition, which will be 3 years from now, that's when you will see definitely quantum jump in terms of financials.
Okay.
Because we follow complete method of accounting, not a POC method.
Right. Thanks a lot and all the best.
Thank you. Thanks, Abhinav.
Thank you. We have the next question from the line of Alpesh Thakkar from Antique Stock Broking. Please go ahead.
Thank you for taking my question, sir, and congratulations for a very good set of numbers. Just one from the strategy perspective. We have spent quite some time in MMR and have been doing really well here now. So as per your assessment so far, how do you find this market in terms of opportunities going ahead for you? And will we continue to play this market via JV-JD model, or are we open to outright land purchases as well? So that's my first question. And just one more to it. So are you what are the key challenges that you envisage in terms of scaling up in this market compared to, let's say, Bangalore?
First and foremost, we want to thank everybody in that region for the welcome that they have given and for the love and affection for Prestige Group and all the customers who have bought homes from us. Very, very encouraging. Therefore, we have right now 6 projects in Mumbai. At GKC 2 projects and Prestige Liberty Towers at Mahalakshmi. We have Prestige 3 residential projects, 3 office and 3 residential. Residential being at Baikala Mahalakshmi. We have one at Palivil, which is Prestige Daffodil, and we have Prestige City at Mulund. That's NCLT transaction. Prestige Daffodil is a redevelopment transaction, and the Prestige Baikala is outright buy. So this is what will give you in terms of strategy. So there is somewhere redevelopment, somewhere outright buy, somewhere NCLT. So looking at the opportunities the way they come and evaluate. We have 2 more projects in pipeline. Since we set the plan, we would like to expand. We're happy with what we are doing, and we've got a large, big committed team there. 3 projects are coming up at Marine Line. We have Prestige Northeast coming at Worli. These 2 projects. And there are few transactions which are under discussion, which will become projects, or maybe upcoming projects, in a couple of quarters.
Got it. Thank you. And just last one from my side. So probably I must have missed it in the initial comment. So how much capex is left in our retail and commercial ongoing projects, and what is the status of the DIAL project? What is the ground status over there?
7,000 crores is the balance to spend Prestige share in retail, office and hospitality projects, which will be spent over a period of 6 to 4 years, and that will contribute to the annuity portfolio significantly. As far as DIAL project is concerned, we've made tremendous progress from the time we have entered that project, and if all goes well, of course, there will be in that region some weather issues, but at the pace at which we have been doing, we continue to work. 2024, that's the year after next, when the project will get completed.
Okay. Thank you. That's it from my side, and all the best.
Thank you.
Thank you. We have a follow-up question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Thanks for the follow-up. So my question is on the commercial market outlook. So we have a huge under construction and forthcoming pipeline. So given the headwinds, the global headwinds and ITS news that news flows coming in, so how do we see the outlook for the office market, both in Bangalore and Mumbai? The Mumbai portfolio is also quite sizable. BKC itself is 4.5 million, close to about that, where the absorption in BKC is about 3 to 4 lakh square feet annually. So how do we intend to lease out? So if you can give some outlook or views on both these markets, how do you perceive this?
Now, whatever is getting completed is a priority for leasing. As I mentioned earlier, we have a project getting completed in Kochi, 2 of them in Bangalore, 1 in Hyderabad, Prestige Kitech, and 1 in Pune. And all these places, there are active discussions. Some amount of areas we have already leased, some fit outs, and there are discussions that are going on, and we are confident that this will get leased out given the quality of the building and the inquiries. It will get leased out soon. What you mentioned with respect to BKC and Bombay commercial activity, BKC is still an upcoming project. It's going to come to ongoing projects this quarter, and there is 3.5 to 4 years of time to complete. And we are confident that with the kind of design, the building specification that we have got, and access to metro station which is being right in front, we should be able to lease them out. And we have time to do that.
Okay. In Mahalakshmi, how many floors do you intend to build, and in BKC, like how many floors will be there?
Mahalakshmi, Liberty House is 80 floors. It's 230 meters. It's about 67 floors.
67 floors is Mahalakshmi, and this is around
2 towers. The tallest tower is that, and there's a shorter tower.
The tallest only be 67 floors, and this would be around 25 to 28 floors.
Which one?
Wow.
Maybe 18 floors.
Okay. Got it. And just the last thing on the Mumbai, I think you guided earlier that 3,000 crores could be the pre-sales contribution. So are we on track to achieve that for this financial year?
If we can launch the remaining 2 projects, hopefully we should get there.
Okay.
At Marine Lines as well as the overlay.
So how has been the response to the Jasdan project? Marine has been doing quite well. So what would the sales till now in the Jasdan project? I know it's a little bit of a brilliant project, so it may have a slower sales velocity, but so how do you see that project panning out in terms of pre-sales?
It's been quite good so far. A small project compared to that of Prestige City. We have a total sales of 150 crores from Jasdan Classic.
Okay. Okay.
Big quarter.
Okay. 150 crores. Okay. Thank you, sir. That's so much.
Thank you. We have the next question from the line of Kunal Lakhan from CLSA. Please go ahead.
Hi, good evening. Firstly, on if you can share some data points on how much percentage of our buyers avail of mortgage finance, and if the recent hike in the mortgage rates, are we facing any pushback on the demand side? And also in the same breath, if you can highlight some or give some color on like how the demand has been in the festive season in October and November so far.
It's been good. So now let me first talk about the market. The percentage of the people who go for mortgage loans varies from region to region. Bangalore, almost 75 to 80% of the people go. Hyderabad would be 10% lesser, and Mumbai is a different market. So on an average, if you take all regions put together, it could be around 60 to 70% of the people going for mortgage. Yes, the increase in the interest rate definitely hurts by reducing the eligibility of the people. So because per lakh EMIs have gone up and the rate increase has been very quick. So from the people who avail mortgage point of view, so far we haven't seen big drop in terms of demand. but maybe one more hike can be factored in. But beyond that, I think it will start hurting the sentiments.
Beyond what mortgage rates would you think it will be?
Maybe another 0.5 to 0.75% hike should be okay. People must have factored in by now. And beyond that, yes, good hurt.
But so far the footfalls and the conversions are okay.
So far it's been okay. Therefore, it's been reflected in the sales that we have done also.
Sure, that's helpful. Secondly, I just had a question on the commercial rental ramp up that you have put out in the presentation. So this rental ramp up to 2640 crores and 510 crores in office and retail. This I'm assuming the 7,000 crore of capex our share will get us to this number. And firstly, is this rental ramp up our share or in total? I'm assuming this is total.
No, you're referring to the slide where you have given the 5-year projection?
Correct.
This is our share.
40 crores by say FY28. Is it our share or total rental, including JV?
Our share.
This is our share.
Yes.
And even the 510 crore for retail. But so you're saying that 7,000 crore of capex that we plan to incur, balance capex, will get us to these numbers?
So let me get the details.
That is only for ongoing. For upcoming, there is ongoing.
The total annuity projections that you see in the slide is for ongoing as well as upcoming.
Okay.
And the spend that you asked for earlier is the balance to finish cost of the Prestige share with respect to only ongoing, which is 7,000 crores.
Sure. So this
and upcoming projects to give you rough estimate, that would be another our share of around 7,500 crores.
Yeah, that's something I was looking for. Okay. Great. Thanks, Venkat. Thanks, Irfan sir. Thank you.
Thank you.
Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thanks everyone for your participation. It's as usual been a very healthy and hectic participation. And our teams have been working hard to see that whatever goals are set are achieved and exceeded. So I think going forward also things are looking good. We are very positive and hope to see you next quarter again.
Thank you. Thanks everyone for taking time out to be on the call. I mean, it has been very interesting conversation that we had with all of you. We are happy to see that most of you are tracking us in detail, our entries into various geographies and the response to various projects, and have been giving inputs also offline. Thank you for for the interest and the inputs and everything. We look forward to your continued support. And as our chairman said, we are, as a team, are working towards seeing how we can grow beyond where we have reached. And we believe with the kind of pipeline that we have got, exciting times are ahead. Thank you very much.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.